I'll be going through with you Boston Scientific stock. Yeah, just paste it in Google, click enter, and you can see the name here, Boston Scientific Corporation, and its BSX is the symbol in Nasdaq. If I want to buy it right now, I have to pay $42.76 US, and it's a billion size firm. It's a big size firm. It isn't paying any dividend. Any firm that is paying dividend, that means they are financially strong. Even if the dividend is less than 1%, that's brilliant news, because after paying their cost, liabilities, creditors, they still have extra money. That extra money pays to shareholders as dividend. So any firm that is able to pay dividend, that means they are financially very strong. This firm is not paying any dividend. It could be they're not financially strong, or maybe they are financially strong, they have extra money left, but they decide to reinvest in their own firm to further expand. So it's up to you to find out that are they reinvesting the extra money to further expand themselves, or why aren't they, if they're not expanding, if they're not reinvesting, then why aren't they paying any shares, like why aren't they paying any dividend? Because either they are reinvesting or they, so it means that you need to find out why they don't pay dividends. That's a very important question. Now let's go to Wikipedia and see when was this founded. You can just search this box, see 1979, and then let's see what the employees have to think about this. Let's copy this exactly from Google, paste it here, type Indeed reviews, enter, and I can see here we have 1400 reviews and it's 4-star. Read through the pros and cons yourself, what people have to say, check out the photos, jobs listed, and the question asked, and please also check the reviews in Glassdoor. That's a brilliant website as well. I can see that they have 1600 reviews and it's 4-star. That's brilliant. Read through the pros and cons yourself. Check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, the photos and everything. Check the Yahoo Finance for key executive salaries as well. That's very important for us to know. So I'll just paste it here, exactly here, and I can see that please click on the Nasdaq symbol BSX, and then go to profile, and you can see, just one sec, you can see the sector, industry, and the employees as well. Okay, and the best part of this form is that all the key executives have shown their salaries. That's important because we can see all the salaries of the key executives. That means that there's a lot more transparency and we can build trust with this form. That's brilliant. Let's go to macro trend and see the ratios. So I can click on price ratio, price book ratio, type in the symbol, and click that. Now I'll explain you briefly what the price book ratio is. If the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount. And if the price book ratio is more than 1, that means stock is expensive. The higher the number goes, the more expensive the stock gets. So let's have a look. Sometimes it takes time to load, so don't worry about it, be patient, but it will make your life quite easy. Please let me know if you have any questions for me, or if you have any request for me that you want me to do research on a particular stock. Please let me know as well. And if you would like to connect with me, let me know that as well. Okay, right now I can see that we have 6.31 price book ratio, so the stock is 6 times more expensive to buy right now. Anyone who will be buying right now, they'll be paying 6 times more money to buy the stock. I can see in 2019 June it's 6.35, which means somebody bought in 2019 June. They paid $42 to buy something that was $6 worth. They bought it 6.3 times more expensive. So somebody who bought in 2011 September, they got nearly 33% discount. It was a sale of 33% because they paid $5.9 to buy something that was $7.6 worth. They got a discount. That's brilliant. So, right now it's 6.3 times more expensive to buy the stock. Let's go to other ratios. I want to have a look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Please look for 1.5 or more than that. So it's just loading right now. Let's have a look. Right now I can see it's less than 1.5. That means stock is risky. Let's look at the previous trend as well. Has it ever been 1.5 or more than that? Yes, but just for a while, for once or twice. So there's no consistency of it being 1.5 or more than that. So I'm just looking for consistency. So I can see in 2011 and 12, it's more than 1.5 for 2 years. Then there's like fluctuations. So I would say it's a risky stock because you know it's there's no consistency of it being 1.5 or more than that, so it's a risky stock in terms of current ratio. Let's go to debt equity ratio. I'm looking for 0.5 or less than that for it to be very safe and have a good margin of safety. This ratio will tell me if the stock is mainly operating on, if the company is mainly operating on debt or equity. I'm looking for 0.5 or less than that. I can see that it's more than zero point 0.5, so it's a risky stock in terms of debt. It's more than zero point 0.5. Let's look at the previous trend as well. It's more than consistently more than zero point 0.5, which is not what I'm looking for. I'm looking for less than 0.5. But I can see in between, like for a while in 2011, it's less than 0.5, but it's not consistent. So I would say that since we have the data, it's a risky stock because it has majority of time consistently it has been more than zero point 0.5. So it's a risky stock in terms of long-term debt. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant return. Let's have a look. Okay. Right now, I'm looking at more than 8%. That's brilliant return. Let's look at the consistency. Let's look at the previous trend. So just I would say just since 2018 September, just recently, recent 1 year, I would say it's more than 8%. And but that's not consistency. I would say consistency is when it's at least for recent 5 years consistently it's more than 8%. So I can see that before that it's less than 8%, and then it's fluctuating. Then it's a minus return. So there's no consistency. So I would say that just recently it has been above 8%, but that's not consistent. So I'm not sure what to say. So it's up to you to decide.